this kind of like 2.5% to 3%, somewhere in that range, inflation number is going to be pretty sticky, and we're seeing it here again. So happy Thursday. We have some inflation data to cover here after the Fed minutes just last week, and with all eyes on where inflation goes from here. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction. And we set up these weekly webinars to share some of the data, the news, trends we're watching, hopefully weed out some of the noise along the way. And again, this week is really going to be primarily focused on inflation, because just this week on Tuesday, we had consumer price index numbers come out. And then on Wednesday, we had producer price index numbers come out. So let's focus on the CPI numbers first. And keep in mind, there's CPI, the headline number, which includes basically food and energy, and the core number, which strips out the food and energy. So keep that in mind as we go through this today. What I will share is that in general, they came out hotter than some more recent numbers, but in general, in line with expectations for the month. So the headline number, CPI, came out up 0.3%. For those kind of keeping score at home, this puts it at about 2.7% for the year over year number. Now, what's always important when we look at these is to actually break down the numbers a little bit too, because what we see is that a huge majority of this increase for the month actually came from energy. And I think a lot of this is based on the higher oil prices, essentially, due to the concerns back in June around some of the potential war and where things could have gone, with the escalation there between Iran and Israel. So just as a heads up, keep this in mind as we look at these numbers. The numbers are important, don't get me wrong, but we also need to break that apart a little bit and see what makes them up. And this is ultimately why the Fed also talks so much about stripping out food and energy and looking at the core, or what they sometimes refer to as super core, depending on what they're looking at. But either way, the number was a little bit higher than it's been lately. Again, right in line with expectations actually for the month, but a big majority of that came from higher energy prices. And then we had core CPI, so again, take out food and energy, up 0.2%, which was actually slightly below expectations coming into the month. And that puts the core number at 2.9% year over year. All right, so again, headline CPI, we're at 2.7% year over year. Core CPI, we're at 2.9% year over year. So I don't think this is too much of a surprise. Again, I'm not feeling like we're going to necessarily see a period of significantly higher inflation. With tariffs, to be fair, there could be a spike for like a month or two. But in general, money supply is what we really watch to keep a closer eye on inflation. However, I do think, like we've been sharing for a while, that this kind of like 2.5% to 3%, somewhere in that range, inflation number is going to be pretty sticky, and we're seeing it here again. So it's not a runaway number, but obviously it's still a ways from where the Fed would like to see it. We also had producer price index numbers on Wednesday that fell flat, came in flat versus the expectations of it being up 0.2%. So again, producer price index actually flat for the month. And again, expectations were that it was going to be quite a bit higher. So that's kind of the inflation story in a nutshell. Again, this is really important because the Fed is kind of coming back into the forefront here of what they may do moving forward. And we'll see as data kind of continues. But ultimately, they shared last time they feel a little bit better about the labor market, and they're really watching this inflation number moving forward. This would suggest that, maybe it's not done yet, but I don't know that this is a big enough increase for them to potentially not cut rates later in the year. Time will tell, right? We have a lot more inflation data to come out for the month, so we'll be sure to keep you updated there too. And then last thing I wanted to cover this week is today we also had retail sales come out, and retail sales were up 0.6%. This was quite a surprise number. It could be a part of why we saw markets kind of pick up quite a bit here today, much higher than expectations. And, again, retail sales is kind of a signal of where the consumer's at and if they're spending or not. Keep in mind, this did come off of the back of a down month, but nonetheless, much higher than many had expected here for the most recent number. So again, retail sales up 0.6%. For this week, we are going to skip our question of the week. We actually have a client town hall this evening, so kind of gearing up for our event here today. But be sure to tune in next Thursday. We're going to cover basically the housing data in a nutshell. There's a lot of housing data coming out between now and next Thursday, and we'll be sure to keep you posted on how all that shakes out. In the meantime, if you are in the Pacific Northwest or probably anywhere at this point, enjoy the summer, enjoy the sunshine, enjoy the upcoming weekend, and we will see you next Thursday at 3.